Good day, this is Graham Bibby on the 17th of April 2015. Today I'm giving you a slightly different Camtasia update. Usually I speak about the Insiders Club and sometimes I do global markets, but also in the Insiders Club there's a service and methodology of buy and sell signals based on my FOS fund optimization service. Now this service from 2002 to 2010, if you'd followed all the buy and sell signals, this is in a period when the Nasdaq and the tech stocks were still falling because it started in 2002 and those areas kept falling in 2002 and 2003, and also encompasses the global financial crisis period of 2008 into 2009. If you'd followed that methodology, you would have returned somewhere in the region of 392%, depending on when you actually place the buys or sell signals. And the world index in that period went up 37%. So there was over a 10 times outperformance, and the majority of that was really for protection of the downside. Now the reason I'm showing you the modern equivalent of the FOS service is now we use a thing called exchange traded funds, and the name implies there are funds and they're traded on an exchange, so they're very much like stocks. My previous performance was achieved using mainly mutual funds and unit trusts, and these things did what they call forward priced. So if you want to sell now, you can't. You have to sell when they work out the unit price, which is once a day. And if you've missed the cutoff period, you're looking to wait another day and actually to get in or get out. But exchange traded funds are traded on an exchange, and we tend to look at the US. So you can get in and out much more efficiently. So if I look back at the period 2002 2010, my performance, I believe, will be even better. The reason I'm showing you this service now, my Insiders Club service is going gangbusters. I've got, as I keep repeating myself, I've got a great list of really undervalued superior earnings growth stocks. This means I've got stocks with low PE ratios, the price to earnings ratio, the price you pay for the earnings, relative to the forward earnings growth consensus. Earnings growth means earnings are going to grow by what? And in many instances, mine are growing 20 to 30%, and which means if it was the S&P 500, then if something's growing 30%, then the PE ratio, if you correlate it to the S&P, should be somewhere at around 46 times. I've got the stocks growing 30%, and the PEs are in the 8, 9, 10, 11 range. And if you take PE ratio to growth ratio, which is what I'm talking about, the S&P 500 currently forward earnings growth is 10% per annum, and the PE ratio is somewhere in the region of 17. So for 10% growth, you're paying 17 PE, which is a 1.7 times PEG ratio. If you go below that, it's then becoming cheaper than the S&P. And I'm ideally looking for stocks with a PEG ratio of not more than 1.2, ideally less than 1. And in many instances, I've got stocks at 0.8, 0.7, which means they're extremely cheap for the growth rate. Anyway, why I'm showing you the equivalent of the FOS, the Insiders Club FOS, is because we've got breakouts everywhere, and emerging markets have been hit over the last 6 months, including Asia, which looks favorable. As you know, Europe's been in a bit of turmoil, so there's a lot of things to talk about. Last July, in one of my Camtasias, I said that Shanghai had broken out to the upside. And looked to me, and I think I was even on TV saying this, that I thought China was in the early stages of a new bull market. Now, I've been around for 35 years doing this every single day of my life. So I've seen a few ups and a few downs, and I've traded everything from stocks, commodities, orange juice, coffee, sugar, I was there in the heydays of the Japanese stock market. Now, China reminds me a little bit of Japan in the early 80s. It was always the place to be. It was always the strongest currency, and everyone thought the Japanese were different. They're superior traders, but they were in a raging bull market that saw the stock market go nearly to 40,000, and then it crumbled. Going into 1989, the trend changed. I gave a sell signal. I didn't know how far it was going down, but at one stage it hit somewhere in the region of 7,000 something. So I believe China is in a new bull market, and that's because there's restrictions being made all over the place on property in China, in Singapore, in Hong Kong, which is the favorite areas for the Chinese. That's why a lot of them are going overseas now to look to invest, especially Australia. And there's been restrictions placed on money going into Macau. So now it looks like the locals, which are starting the uptrend, are looking at the stock market. And most global analysts believe, and they have for some time, that on a relative basis, China is cheap. And it seems to be, and I believe, that the stock market, to some degree, directs which way the economy is going. Some people say it's a forward-looking barometer. I believe that if you, me, everyone is benefiting from property prices rising or stock market prices rising, you feel more affluent, you feel more confident, and if your self-managed super, even, for example, was 200,000, and by the end of the year it's 300,000, you feel really good, and people tend to spend money when they feel good. So anyway, I better not go on too long about this, but I just wanted to show you. This is some of the areas that we're in, and some of the things that have been happening, let's say, over the last 5 days. Now, China, this is the Chinese, one of the Chinese ETFs. And I told you, if you follow this arrow, it broke out here in July, the Chinese stock market. This ETF was actually in the region of 28. Today it's 59. And I think this is the early stages of the bull market. So they haven't lost out. We don't put all our eggs in one basket. And we were using another ETF called YIN, Y-I-N-N, but it was all over the place, as I'll show you in a sec, and wasn't reflecting the true movements of the stock market. So again, here's July, and you see it, we even had a sell-off there, and it was really going nowhere. And now recently it took off in the beginning of April from 40 to 66, which is a huge jump, but it's one-way traffic up, and it's highly volatile. So kind of leaning towards PEK. The biotech industry had a bit of a correction. It's now back on its upward trend. It corrected here, back on its upward trend. But what I'm really interested to show you is this is an emerging markets ETF, and it's broken out. So at the beginning of April, it broke out to the upside. So I think that's looking really good. This is emerging Europe. At the beginning of April, has broken out to the upside. I believe that looks very good. I'm really, really impressed with what's going on in Asia. So let's have a look here at my watch list for Asia. So this one's Vietnam. I wouldn't be advocating buy this right now, but you know, it's had a strong run recently. This is Korea, which we had and sold and in a previous sell down. We're now virtually fully invested, but it's broken out. You see here at the end of April. This is Singapore, beginning of April. It's risen above these highs, so that's a breakout. That means it should carry on going up. Something we're really looking to add today, this is Thailand, which is doing all this sideways movement. You remember last year on this bottom here, this point here, it gave a buy signal on Thailand, and it went from 64 to 84 and then did basically nothing. If we look at the Thai index, that was the move here. So this rebounded sharply from the bottom of 2008. In this case, it bottomed before the rest of the markets and then confirmed the bottom in 2009, as did all the markets, and that's why you saw me on CNBC saying it was a buying opportunity of a lifetime. Now we've had sideways consolidation, so now I believe we're in the early stages of an upward move. And this is Asia. Oh, sorry, that's not the one I was showing. Where are we? Here we are. This is the one. This is Asia ex-Japan. And again, beginning of April, breakout to the upside from 64 to 69. It's almost 10% in a month. I think it looks really good. I think emerging markets look terrific. This is sideways consolidation since 2010, let's say. So 1, 2, 3, 4, 5, over 5 years of consolidation, and now we're breaking out to the upside. Now, the longer this sideways movement is, the greater the move normally is in the direction of the breakout. And this is broken out to the upside. So that looks really exciting to me. This was the bounce here from the bottom at the end of 2008, and then basically since here, end of 2009, we've largely gone sideways. But I think we're in the start of a new bull market. So anyone who's looking at adding to their insider club portfolios, I would suggest, if you've got, say, $300,000, $1 million in the Insiders Club, that you add to that with a portfolio in the Insiders Club FOS. And I'm quite happy to talk to anybody about this. I can have a Skype, 10 or 15 minutes, explaining why I think this is going to be one of the best years, I believe. I was really bullish on my Insiders Club stocks, the buys and sells, because they're so undervalued and I've got such superior earnings growth that I believe, and I'm focusing on making this one of my best years for that, so that would be pretty impressive. But I've got fired up about the FOS service, because last year for that we were in cash a lot of the time. I didn't actually go fully invested, so that was not really a trending market for individual indices, but we got so many breakouts on the upside now. I believe this could also follow my Insiders Club and be one of the best years of performance for my FOS. So I hope that's been useful. Next week I think I'm going to put out an extra Camtasia, because I've got so much to say, and there might be some kind of write-up in the week as well. So please follow what a number of people have been doing in the last month or so. Actually, there's been a significant interest in joining the Insiders Club, and I will welcome anyone to join it. And if you're not sure and you've got an existing portfolio, just want me to take a look, happy to give advice. No obligation, no charge. I'm just here to help. The more people I help, the better, because at the end of the day, 25% of all profits go to help children who don't have food, water, shelter, education, and a smaller proportion goes to help old people that appear to be abandoned in some old people's homes in Asia. So I'm wishing you a fantastic weekend ahead, and a very prosperous week for next week. So this is Graham Bibby. I've gone over the top 13 minutes something, saying bye bye for now.